Well, hello and welcome to the next instalment of Nucleus Insights, entitled Bitcoin or Bitcon. I've been quietly looking forward to this one for quite a while, so I think we're in for a great ride. But look, before we start, we'll kick off with our disclaimer, of course. Just a reminder that the following presentation is general information only, and whilst Nucleus Wealth aims to present informing and sometimes entertaining content, please consult your investment professional, financial advisor, or us, I guess, before making any decisions from anything discussed in today's seminar. So off we go. My name's Tim Fuller. I'm a certified financial advisor. Had many years of working in the retail financial advice space with mums and dads and other accounts with or through a couple of major companies in AMP and Mercer, and also with a smaller SMSF focused private wealth company. I have sitting with me here, of course, David Llewellyn-Smith, co-author with Ross Garno of Great Crash of 2008, Chief Economics Editor and founder of the Diplomat magazine, and now, of course, Chief Editor of the highly read and very popular Macro Business blog. Sitting just across from him, we have Damien Klassen, our Head of Investments for Nucleus Wealth. Prior to that, he was working with Schroders, dealing in mining, energy and big data, looking after helping to look after a quantitative fund, equities fund of substantial amount there. Prior to that, again, Wilson's HTM as Head of Quantitative Strategy, and was also the founding partner and Head of Investment Research for a equities analyst firm called Aegis. So welcome to you, Damien.
Thanks, Tim.
Okay, so to kick us off, we've got our agenda for our seminar today, Bitcoin or Bitcon. We're going to be running through a couple of key themes. So we'll be looking at the blockchain versus Bitcoin as a cryptocurrency. We'll be looking at, will central banks and governments actually allow private money such as cryptocurrencies, having a look at how much they're worth, and also, I guess, just broadly having a look to see if we've sort of seen these sorts of things appear in the investment world before. So without any further ado, let's jump into it. Damien, in regards to the blockchain, just to get things going, what are your thoughts there?
Yeah, look, I just wanted to give a touch quickly on the technology. It won't be an in-depth one. We're just given the time frame. It's not sort of it's not worth going through that. But and there's plenty of places where people can find the technology. The couple of key parts with the blockchain, though, is what I've got up there on screen. Is you've got this external verification of transfers. So the idea is that there's a ledger that's publicly available, or at least managed in a centralized location, and it's verifying transfers from third party by people who aren't involved in the transaction. And then this centralized or distributed permanent record of every transaction. So the idea is that, certainly from the blockchain, it's very useful technology. There are, if you look through the finance industry in particular, there are tens of thousands of people who sit in back offices at most fund managers or asset managers, whose sole job is just to make sure that one person has the asset, that they sold it to the next one and has it passed hands properly, and where is it in the chain, and this can remove a lot of those issues. So in terms of the technology, there's plenty of people looking at it. The ASX is looking at it. Most stock exchanges, but there's also plenty of other places that manage assets and need to make sure that the custody or the ownership of an asset is passed from one person to another. And blockchain is extremely useful in technology in terms of being able to do that.
So broadly speaking, before we dive into Bitcoin itself, I guess the underpinning technology being blockchain is it's a pretty significant sort of addition to what we can do with it.
Absolutely.
Okay,
Absolutely.
Sure thing. So I guess now jumping across to Bitcoin, of course, what can you tell us about that? Your thoughts there?
So Bitcoin has got a couple of benefits going for it. The first thing is they've got this first mover advantage in that they're the biggest and they get the most press, and so it's this whole snowball effect of people are interested in this cryptocurrency, or they see the blockchain and like the idea of it, or like the process behind it, or even just caught up in the excitement of the whole cryptocurrencies, and that's the first port of call. So they've got this first mover advantage in terms of that point. Secondly, they've got this limited supply. So by the very nature of it, the supply is limited, which means that the more people you've got interested in buying some, you can really shove the asset up quickly, because you just can't. A supply just cannot expand quickly enough to meet. So the other side, though, is the power usage of it. Now, I think you've got some stats there, Tim.
I do indeed. Yeah, look, I'll quickly run through a couple of the stats. So I've pulled these from a website called digeconomist.net, who I think from my research anyway seems to give the most sort of researched background on that. A couple of things here, some staggering power usage. Obviously, Bitcoin at the moment needing a lot of power. They've estimated it to be somewhere in the vicinity of 32.7 terawatt hours per year, which is a bit of a foreign number to most people, I'm sure. But as it turns out, it roughly equivalent to the amount of power that Denmark uses as a country per year, which is staggering, I guess. As a percentage of world electricity consumption, it sits somewhere around 0.15%, which whilst doesn't seem big, I guess, for something that that isn't a country and not producing anything huge. I'll carry on with the stats just for a minute, but the another interesting one was the electricity consumed per transaction. They've estimated to be around 234 kilowatt hours. And then to make sort of sense of that, I've just sort of had a quick look at the Australian Energy Regulator, and they've estimated an average Australian household to use about 18 kilowatt hours per day. So it's equivalent of 13 Australian households' daily usage to create or to perform a transaction, which is worth about $58 in Australian power costs at 25 cents a kilowatt. So that's remarkable.
Yeah. So we'll sort of cut you off there. So you're getting the idea, I'm sure. People are getting the idea that, you know, there's major issues with the amount of power that Bitcoin uses. There's also issues in terms of the number of transactions it can handle, and you know, and the time delay behind these. So, you know, people like to be able to pay for stuff and collect, you know, straight away, and that's not the case when you do start to get major numbers of transactions. Okay, so we have these issues, but before we really get too concerned and too wrapped up about that, it's worth noting that there's a whole bunch of different cryptocurrencies out there, and the thing is, there's I think 800 or 900 different varieties. There's probably more by now. You know, as I'm speaking, somebody's probably creating, you know, there's probably 10 or 15 people out there creating these things. And most of these do have solutions to those. Like some of those factors that were built in that we're complaining about with Bitcoin were built in as part of the design of the thing to make sure that you know, people could mine these things and it was profitable for them and stuff like that. But so the thing is, there are solutions. So we've got this technology. We say, yes, this is a good technology. We've got Bitcoin, which has got some significant problems in terms of being a widespread technology that's used by the rest of the world purely because it's just wasting power in order to create money. And we do know that there are solutions to these problems. So,
okay.
You know, I think there's the question. Comes down to what David will get into in a little bit. The question really comes down to, you can argue about the technological problems and the issues with it. The real issue with these cryptocurrencies is, will governments allow private currencies? That's, you know, and gold is sort of almost a private currency, you'd say, but there are some backing behind it. You know, the question for these is, will it be allowed by central banks? And we'll move on to that a little bit later. Before we get into that, though, it's worth just sort of going through what money is. Because, sure. So we've discussed Bitcoin and sort of its backing. Now it wants to be money, and so, you know, the question we've got to ask is, you know, what is money? And so money is sort of usually defined as three things and sometimes a fourth. So a medium of exchange is the main one. We want to find, you know, I want to buy a product, you want to, and you want to sell a product, and we could barter for it, but if we don't have exactly what we wanted, then we have a problem. So we want to find something that's a medium of exchange. Now, in the early days, Bitcoin certainly fit this category, and most cryptocurrencies, that's why they were sort of brought out as a medium of exchange. The problem is, given the huge speculative interest in these, and the fact that the prices are so volatile, is that the number of people using these to pay for a pizza or to buy, you know, a coffee and things like that, and the amount of energy that now goes into the amount of energy that goes into a cup of coffee
for the transaction
is less than the amount of energy that goes into the transaction. so as a medium of exchange, it's sort of used to be, but unfortunately, given its limited supply, it's struggling with that. Is it possible for other cryptocurrencies to be a unit of exchange, a medium of exchange? Absolutely. A unit of account. So basically, what this is just saying, if you're doing your P&L or your balance sheet and you want to add things up, you want to use something to say, well, I know I've got a house and a car and some investments. How do I actually measure the value of those, or how do I measure my profit and loss every year? And that's what we use money for, as a unit of account. So we've got conversion rates for Bitcoin. You can use Bitcoin as a unit of account. A store of value. This is a key one that the Bitcoin professes to be, and it is it's where it's sort of, I guess, the whole thing's headed. The more speculators you've got in there, the more people are saying, well, it is a store of value, and we'll approach, we'll have a look at that as to how much you can consider a private currency to be a store of value. And then finally, that sometimes you get it as a standard of deferred payment, which is basically just debt. How do you account for debt? But we'll leave that. We don't have borrowing or widespread borrowing it, certainly in an open way with Bitcoin. So we'll leave that for later.
Hopefully not, but I'd assume it's probably happening.
Yeah.
Okay, so fiat money.
Yeah. So the other thing while we're sort of defining things is fiat money, fiat money is basically money that's been declared to be so. So there's nothing really backing it. It's worth, most people who have concerns about fiat money talk about how gold is not fiat money because it's actually got this real tangible thing behind it. My take on that is, well, silver trades at sort of $15 an ounce, gold trades closer to $1,000 an ounce. They're pretty similar metals in terms of industrial use and all that type of stuff. Gold is, has got properties that make it more useful, but the actual backing of gold is probably, let's say it's 10 times more useful than silver. That sort of makes it $150 an ounce, still trading closer to $1,000 an ounce. There's a lot of fiat based in there. There's a lot of just people assume that I'm buying gold because I think other people will buy gold, and it's this whole trust thing. So the trust behind traditional money is behind gold. Well, trust behind gold is that people have used it for 10,000 years, or pick your time frame, and so there's trust in there. The trust behind traditional money, so the US dollar or the Australian dollar or the euro, is that central banks will manage it, and that what you'll have is that you've got this constant conflict in terms of a fiat money, where people who have money or are business owners or things like that, they want the supply of money to grow slowly. They don't want inflation to get too. They'd like to just have very stable and something. They earned some money last year. They would like in 10 years' time that money to be worth way more than what it was.
Mm-hmm.
They don't want it. They don't want the value of that inflated away. On the flip side, employees and people with debt, they want money to supply to grow as fast as they possibly can. So their debts and their wages rise, and their debts fall
shrink.
and their wages rise.
Sure.
So any money system is all about balancing those two. It's the fight constantly between it. In central banks, we've created these central banks that are meant to be there to manage that. They're meant to be the independent arbitrator. So you don't have governments out there like the Zimbabwean or the Weimar Republic that go ballistic, increasing inflation because it makes most of the people happy, and they have to sort of manage the inflation at a reasonable level, and they're there for the trust part. So the problem with the cryptocurrencies is you need this trust. Now at the moment there is this technological trust, I guess. Probably a lot of it's because it's lack of knowledge, which puts the trust in it. But having that trust behind the fiat money is the key bit, and most of it is like, so let's say for Bitcoin is a lot around it. It's very hard to create the Bitcoin, so the trust in that the money supply won't expand quickly is there, but the trust is, will the money supply actually expand to meet the number of users? That's the harder part.
Okay.
So.
Sure thing. And so then I guess moving on. Interesting.
So the key bit is you want to be able to convert it to real money, and it's a bit of a shame that you've got this cryptocurrency that's sort of designed to be a unit of exchange, and it's no longer a unit of exchange because speculators have taken over and bid the price up. And so now what actually matters is because I know I find it very hard to transfer it for real legal goods, and banks are generally prohibited from doing this because they don't know who they're dealing with, and they don't want they've got these anti-money laundering obligations, and they don't want to lose their licenses on transferring Bitcoins. So that the key bit is being able to transfer into money. Because exchanges can't deal with the banks, they need you. They need individuals to turn up with $5,000, $10,000 and give them real cash that they can exchange for Bitcoin, so that they can get real money back out of the system. So there's this real, which is why the discussions of Ponzi scheme and stuff like that is that basically we need to keep getting more people pumping money in this, because we can't deal with the real banking system. So we need to get people pumping their own cash into that to help fund people who are looking to get out.
And there's a real danger there, isn't there?
Absolutely. Yeah. So we'll move on to the dangers after we've sort of got the structural ideas. But yeah,
okay, very good. So look, obviously, Bitcoin being the first to market essentially, or the most popular in the earliest days. It's been interesting. The evolution in sense of sovereign and federal governments are now looking to take on. I've just jotted a couple down there. So Dubai have just recently come out with their M-Cash. Japan are tipped for a release for the Olympics in 2020 called the J-Coin. Sweden apparently are kicking around the E-Krona. And then finally, Australia's apparently the Reserve Bank, it's been reported, it's taking submissions on exploring what they're loosely calling the digital Australian dollar, or unfortunately called the DAD. Which I think is classic Australia, but anyway, so it'd be interesting to see what comes out there. Were there any thoughts on I guess the sovereign applications that are sort of slowly emerging as well? A lot of them are generally pegged to the hard currency.
Absolutely.
Yeah.
So this is coming back to exactly my point for the whole technology side. Is the technology is interesting. There's uses for it there. You can get around some of the structural problems you have with Bitcoin. If you get around those problems and you have ways of reducing the energy use and increasing the number of transactions that it can handle, but keeping some of the benefits of this central transaction and things like that, there's plenty of interest from governments and things like that. The real question with all these is, and what I want to stress most is, don't stress about the technology. The technology is good. Some of the things have flaws. Don't stress about the flaws in it, because you can work around those. The real core thing for anyone who wants to put money into this is, do you believe that central banks will allow private cash, private monetary systems to flourish, and that central banks lose their issue,
their control,
stop becoming the issuer of legal tender, that we create a whole bunch of these private currencies that sit out there or reliant on those. And so that's so I guess what I was trying to do here is give you a quick thing about the technology, but then telling you ignore the technology, because the whole thing comes down to, will central banks allow private monetary systems to flourish or not?
Okay, fantastic.
That's where it's worth handing to David to discuss a bit more.
Yeah, we'll chuck over to David, and I guess look, Bitcoin, whilst we're at dizzying heights at the moment, and I think as you mentioned there, Damien, the constrained supply is certainly adding to the furor and the rise. It is still, on any basis, quite a minuscule currency in terms of market capitalisation. But if it was to be sort of 5 or 10 or 100 times bigger, I guess this is where particularly the Reserve banks are going to need to step in. But did you want to just run us through some of the ins and outs of private currency?
Thanks, Tim. Oh, excuse me. So yeah, I was just going to kick off with a sort of brief history of private currencies. Because to my mind, Bitcoin, although it looks hyper modern and new, is in fact a 19th century phenomenon.
Okay.
Revisited. Our current monetary system evolved, over centuries, and there were a lot of private currencies that lived and died through the 19th century. And some of those even took root and turned into sovereign currencies. And there are still lots of private currencies today doing other things other than Bitcoin. In fact, you could argue to some extent, even our sovereign systems have large dimensions of private currency. I mean, the banks can effectively create money as private issuers, but they are kind of, they do carry the stamp of the sovereign. So I mean, some of the funny private currencies we've seen there are Disney dollars, you know, which you can take to go and buy your cuddly toy, or you know, spend at Disneyland. You know, even Keynes proposed a thing called Bancor at Bretton Woods, which was kind of going to be a private currency that operated between sovereigns. But probably more to the point, if you look at the history of the US dollar, even at the turn of the century, different banks were issuing different dollars. And it wasn't really until the Great Depression that it kind of consolidated into what we know today as the US dollar. And that transpired alongside the creation of the Federal Reserve. Excuse me. So, I mean, it's not that private currencies are intrinsically bad at all. I mean, you know, that history suggests that some of them live and some of them die. But basically, you know, as Damien kind of touched upon, there are 4 challenges for any private currency if it's going to survive, you know, its birth. The first one is the trust issue that Damien outlined. You know, like, will people accept that the private money is legal tender and use it as a means of exchange? Second, previous private currencies have tended to have distribution issues. They've often been issued, you know, obviously, you know, 100 years ago, you could print what you could, but you'd be geographically very constrained in the usage of your private currency. So they never really served the purposes of a sovereign nation. Clearly, a cryptocurrency doesn't have that problem given the internet. Third, the first 2 limitations have tended to lead private currencies to have troubles with valuation. Given you know, you can have these limited or supplies plus kind of unknown demand, it tends to lead, you know, to high volatility, which then kind of draws into question the first issue about trust and how it can be used as a means of exchange. And then fourth, and this is where we kind of come back to the history of the US dollar. When you have, you know, some of these teething issues with a private currency that is born, there's always a risk of a run on the currency because, you know, that trust issue either becomes malformed or gets ruptured by something, whether, you know, it's overbid and then prices fall, or there is you know, some kind of criminal attack on the currency. In the case of cryptos, it could be a hack and or what have you.
And they're quite common, or they seem to be over the checkered past of Bitcoin.
They do, and then you've got other things, you know, when it comes to cryptos, like failed states who are sort of using them to launder and other kind of nefarious issues. And so what over hundreds of years of financial crises and the development of private currencies ended up with is, as Damien described, was a central bank, which stands behind, you know, the currency of a sovereign nation, and, you know, it can provide unlimited currency in a liquidity crisis if you get that run on trust.
So do you think that this is sort of the direction that the currencies are headed? Is that sort of a thought bubble that there might be a global coin as such? I'm sure there's already a coin called Global Coin, but you know what I mean?
Well, that's kind of what Keynes's Bancor was a global coin. I don't think so. I mean, I think the nation state, you know, and its powers to tax, which kind of underpins the solvency of central banks as well, is an immovable rock in the way of that, because that's kind of what gives them the balance sheet strength.
And I guess it would probably turn into a euro all over again, but on a global scale where you've got competing economies under the same.
Yes, well, that's right. And I mean, that's what Keynes Bancor was going to do, was help address, you know, global imbalances by shifting the value of a kind of super currency, you know, once a year, which was a really interesting and very good idea, actually. But let that go. So, just moving on. I mean, in terms of how those 4 challenges for private currencies stack up against crypto, and I guess particularly Bitcoin. There's legal tender and the challenge of trust. The joke that's been doing the rounds very recently about a boy who asked his Bitcoin investing dad for $10. I mean, his dad said, do you need $9.67 or $10.32? Like, because the value, is so volatile that it's become useless as a medium of exchange.
Sure.
Excuse me. Obviously, the distribution issue is not potentially an issue, although at the same time, given the trust issue is there, the distribution issue also remains, even though access is not so much of a problem. It's just a case of uptake. But there are places like Japan you can use it. You can't emigrate to Japan, sadly, if you do want to use it on a long-term basis. But it may be that other countries will take it up. Volatility is extreme. I mean, this is where you kind of can't move just from Bitcoin towards crypto more generally. I mean, at the moment we have kind of contained quantities of Bitcoin, but you don't have containment on the number of cryptos that can be created. And so there's another potential value issue there in volatility. So, when you're facing your challenges about the reliability of the currency, again, that's a very serious question. And then finally, in terms of, does anyone stand behind the currency? Like, if there is a challenge to its value, if the present craze for buying it and driving up the price runs into some resistance, or indeed some of those in the current system that have benefited greatly want to get out and cash in, or there's a wider shock, or there's some kind of criminal shock that hits it. Perhaps North Korea successfully hacks and steals a couple of $1 billion. You just never know, because this is the real kind of Wild West. If any of those things, does or do you get a run on the currency? And what happens in terms of your liquidity risk at that point? Like, do the exchanges have the money to cash out when everybody wants their money back all at once? And I think the answer is very likely no to that. So you have a liquidity crisis built in there, where you have a very small exit with an awful lot of people. So I mean, at this stage, in terms of Bitcoin and probably crypto as well, it looks to have or contain within them all of the problems that have dogged private currency issues in the past.
Over the years, okay.
Over the years, yeah.
So there's nothing new there. It's just same, but slightly different.
Well,
different.
Kind of. I mean, distribution has changed, but I don't think much else has. I mean, efficiency, perhaps, when you look beyond, the power consumption of Bitcoin, at least.
Yep.
Then if you've got some very efficient blockchain cryptos, then that would certainly have increased. But other than that, no.
Okay.
It actually looks like a big monetary step backwards.
Yeah, right. No, fascinating. And I guess given your sort of prior history in your trading activities, what are your thoughts on sort of the recent news that people are coming out saying that this is now our new equivalent to gold, online gold?
Well, Gold 2.0, this is the idea that the Winklevoss brothers who are promoting very strongly, who are, were in early on the Bitcoin rush and own exchanges as well as Bitcoin itself. It's a clever idea. It's a very clever marketing idea, because it takes away all of those questions about means of exchange, because it turns Bitcoin into a reserve asset rather than an actual fungible currency. So it puts Bitcoin in a place where you don't need to address those day-to-day concerns about its value. But in doing so, it raises a whole bunch of new questions about, can it operate as a safe haven reserve asset? And to me, that's pretty laughable. If it's not the sort of endless history of gold's value, it's its physicality, its pure physicality that gives it its safe haven characteristics. These safe haven reserve assets operate as a foil for fiat currency. They're basically a non-fiat currency. So they exist in a way, or they have to exist in a way where if fiat currency were to die, then these real, in inverted commas, assets would have value and increasing value. Can you see Bitcoin performing that role in any circumstance where fiat currency died? I can't. I mean, all the fancy tech goes dark in a war. If it reached such a point where hyperinflation kicked in or whatever, the dollars aren't worth what they were, and shopkeepers won't accept your dollars anymore, are they going to accept Bitcoin?
Probably not.
I mean, you can't hand one over. So I think that's a very dubious notion as well. So I think it's, let's maybe leave it there.
Okay.
And then we can have a bit of a debate.
Sorry, and I might add a little bit to that. I mean,
sure, Damien.
The counterpoint is that somebody like Venezuela, where the reports, and it's hard to say how reliable they are, that the Bitcoin's trying to take root there, but the government's banned it. And I guess that's probably your other issue is in cases where you have got runaway inflation and people are looking at Bitcoin and saying, hey, here's a way I can protect myself from this, is that, well, the government's busy trying to get as many dollars as it can. And so, so that's where you face, the time when you most want it is the time when governments least want you to have it, and they put the restrictions on it.
Yeah, sure.
Yep. That's right. And I mean, that's what all of these questions kind of lead up to, which is that if the private currency's major role is to circumvent the existing system, then, from the anarchist point of view, that might look very attractive, but from the existing system's point of view, that's very ugly. And so, it could be that in a crisis, the government decides to ban it or seize Bitcoin or crypto, as it were, but it might just be day to day. We're seeing an awful lot of central banks, in fact, pretty much all of them, coming out and condemning Bitcoin in increasing numbers. And
in turn, looking to build their own, I guess, which is just another competitor.
That's right,
in the pile.
But they're not. That's not really crypto. Like, that's just a digital version of an existing
blockchain
currency. It's not private currency, which is what these cryptocurrencies are. So I don't think that you should confuse the two. And so. Yeah.
And sorry, just to clarify that, what you're saying is don't confuse the technology behind it with private money. Yeah. Which is where I guess my point was very much technology's got some solid basis. Don't confuse that with, can a private monetary system flourish in
a regulated world?
In a regulated world. and I guess it comes back to things like frequent flyer points is a good example, and one of a blog, somebody who's busy on our chat just brought them up. There's a very good example of a quasi private currency, and arguably even a private currency. And the question comes back to for these ones is that there's the Australian government at least is looking at how it can tax these things when they become too big. And so the question is, how big do these things get before they're big enough that governments start to say, hey, people are using this to avoid tax, they're using this to pay for illegal transactions, and they're using it to circumvent all the things that we want. We want to constrain the monetary supply so we can control the economy. But if we've lost control of the monetary supply because half of it's sitting in this private currency, then all of a sudden we need to get back control of it, because otherwise we can't control the economy. And so that's, for me, that's the real part of it is, again, forget that technology, come back to that. Do you think private currency will flourish? And if you do, then you've got a reason to get out and chase these things. But if you're of the view that at a certain size, governments cannot have people avoiding tax on a wholesale level, and they need to control transactions and control the monetary supply, then it's the answer is that's the end for private money at some stage, at some size and some stage.
Sure. Okay, thanks for that. And we'll move on to one of my more favourite graphs, and I love this graph. And every time the word Ponzi and boom and whatnot get kicked around, I like to refer to this graph. And then the tough bit, of course, is trying to figure out where we are sitting on it today. But your thoughts, gentlemen?
Absolutely at the greed stage, and probably a bit of delusion. I mean, the question is, can it spike higher from here? Absolutely, it could spike higher. There's heaps of interest and lots of media attention, and seemingly, in the boom stage, people focus on all the positives, and there's all the negatives that come up get swept under the rug, and we certainly seem to be sweeping as many possible negatives as we can under the rug, and just focusing on, hey, I know these guys lost all their money and these guys had all this money stolen and all that type of stuff. But hey, how about the guy who, got $10 for one 10 years ago and now he's a millionaire or whatever it is? They've by far over outweighing any of the negative stories.
Sure.
And I think as well, most of these speculative bubbles, they come out. There is a grain of truth behind them, and there is a grain of truth behind this cryptocurrency. There's some interesting technology here, but yeah, don't confuse that with private money.
Okay, and David?
Oh yeah, we're definitely in the greed phase. I mean, how far in is an interesting question. I mean, even a few months ago, if anybody attacked Bitcoin, then it would fall very heavily. Where anyone sort of within the existing monetary system. Jamie Dimon comes to mind. He put a very big dent in it only perhaps 3 months ago, But now today you have the Federal Reserve attacking it openly, and Janet Yellen, and it hardly budged. So there's probably two perspectives to take on that. I mean, the attacks on it are increasing from the existing monetary system, but it's proving to be more difficult to dent or deter at the same time. So, risk is rising, but so is appetite, clearly. So, how those two track one another ahead obviously will determine how high this thing goes. I mean, the market's only worth sort of just shy of 300 billion or so. And so it's very small in the grand scheme of things. It's tiny. So, I mean, it's very interesting that you have someone of the magnitude of Janet Yellen even bothering to talk about it. I mean, that gives you a taste, I think, of how threatening it could be if it were to grow much larger. Could it? I think so. I mean, who the hell knows? I mean, some of the numbers that are being thrown around about, the number of people who are signing up, who are going to trade it and buy it, are certainly very, very impressive. And there seems to be an entire generation of millennials that think it's a wondrous new thing that they must own.
Oh, I think it's our own mining boom. That's what it is. Get rich quick.
And I don't get, obviously it's only a limited personal sample, but from the half dozen I know who own it, they really haven't got a clue about what it actually is in terms of, or how it fits in the history of money.
Sounds like investing in the mining boom.
Yeah, perhaps. So I could see it certainly going further. I mean, I've speculated this week on what would happen if it went up another 10 times in value, and or even you're getting up to sort of 3 trillion. And I mean, when there's that kind of money being thrown around, even at 300 billion and accelerating at the rate that it is, you're going to see crazy innovation accelerate right along with it as well. And we know this stuff always runs way ahead of regulators, but who the hell knows? I mean, you could get somebody starting to issue Bitcoin tranches and securitizing various cryptos. And
we've had that actually. There's a question here on when we might expect the an option or a secondary market in Bitcoin.
Well, we've already got that in a futures market. But what if you want to address the volatility, then why not package a whole bunch of them up and tranche it, and offer the secure tranche only 500% return per annum.
Yeah.
And the risky one is 30,000. Like,
sounds enticing.
And so, you can get a whole bunch of crazy innovation around this. The issue is, I think for regulators, the sort of red line on this has to be if it starts to permeate the banking system.
Mm-hmm.
There are sort of anecdotal and apocryphal stories about people using credit cards and mortgages to buy Bitcoin, and that's starting to penetrate, the very margins of the banking system. But if Wall Street was started doing crazy shit, packaging them up and doing all sorts of stuff, then that would obviously be like throwing a grenade at the regulators, I would think. But so there is crazy momentum here that could generate all sorts of new craziness, and probably will before the regulators are forced to act. So if it were to get to sort of into the trillions, it's still probably not big enough to destabilize global markets or monetary system.
Because it's so widespread.
Yeah. I'm just worried that, there's a bit of a psychological segue developing between Bitcoin as the exciting new leading edge of the business cycle and what's transpiring in wider markets. That's very nebulous, I know, but if you were to a year out get a Bitcoin market in the trillions, and then suddenly a run and wipe out, say $1 trillion in value, at that point, who knows what debt is owed, has been, deployed into that market. Who knows what counterparty is at risk, and that might be enough to actually cause a wider run on, say, stocks. Because we know all assets are kind of overvalued at this point, that central banks are tightening, and that risks are rising more generally. So a Bitcoin bust later down the track from a larger perch could actually be quite troublesome.
Okay.
But the worst case scenario really is that it's allowed to grow to such a magnitude and all that innovation transpire that it actually starts to become too big to fail. I mean, this discussion is about when it becomes too big to succeed. But if it were really allowed to run and penetrate the banking system and global financial markets, then it would be an absolute wrecking ball.
Okay. Yeah, sure. Well, that's things to think about, and hopefully we can trim the excitement back before then. We will need to move on though. But your thoughts there, just finally on lessons from history. So I guess as a bit of a wrap up there, Damien, what have you got to tell us?
Look, yeah, as David said, and I think I've expressed as well, is there's a very big millennial input into this. So and they're sort of the big players in it. And there is a lot of, it is different and it's new and it's exciting and all that type of stuff. And I guess what I keep coming back to is, yes, some of the technology is new, but that technology is applicable anywhere. The whole idea of private money is not new, and this time is not different. It's not a new paradigm. These currencies are worth, basically, if you can find somebody more foolish than yourself who's prepared to pay more for it, and you absolutely can at the moment, and there seems to be more of them. They're flooding into every exchange. That's basically what these things are worth. If you want to put a value on it, it's can I find a greater fool who will pay more than what I did? And the answer in most cases at the moment is yes. But my hugely important point is, don't be the last person to sell if you're going to be in this one, because
have your finger on the trigger.
The exit is going to be crowded, and the thing about saying, oh well, look, when it does start to fall, that's when I'm going to be, I'll sell out before everyone else. I'll make sure I'm the first one out. It ain't going to happen. The exits for these things are very, very small. You might feel like you're dancing close to the exit and you can jump out as soon as the problems come, but there's going to be a lot of other people pushing for that same exit, and I suspect a lot of the people who are a lot closer to the exchanges and a lot more involved in the exchanges, they'll be that they've got a lot of their own money invested in it. Given these exchanges aren't regulated, they'll be looking after themselves first and their friends second, and you'll be a distant consideration for them as to whether they get you your money back or not.
Fair enough. Okay, very good. I'll jump through the last slide because I think largely David covered off on that one on our boom slide. Was there nothing else to add there? That's fine. Okay. And just finally, I guess as a recap, the looking at the cryptocurrencies and not getting too hung up on the individual flaws. We all know, I think we're well established now that the blockchain technology does work and is good. Fellas, anything to add on central banks? We're pretty clear on the fact that they pretty much they won't allow private currency as long as they've got the ability to control money. They're probably going to remain in that position and do everything in their power if they can to keep it that way.
That's right. I think the question is whether they burst it or it just pops by itself. It's probably the case of the latter. Where it just grows, blows off, collapses, and then the central banks kind of say, "I told you so."
Yeah. Okay. Yep.
And there's risks though that could pop up from other ones. I mean, I think China certainly looked to try and prevent people from moving money out of the country using Bitcoin. If you had a high-profile terrorism incident in the US, and it came to light that it was funded by Bitcoin, you'd probably see a big crackdown there. There's 100 other cases that you could sort of see where central banks might step in earlier or governments step in to ban it. So there's certainly there's plenty of it's a fragile system. There's plenty of things that could knock it off, but it's got a lot of steam behind it right now.
Okay, fantastic. And I guess finally, obviously with the 300 billion market cap at the moment, but sort of manageable in a sense. But perhaps if it grows significantly from there, it's going to give these major countries something to think about, because in turn it will start create contagion risk really more than anything if it was to fall.
Yeah, well, I guess that's the last point I was really making about the risks to the broader cycle. That contagion risk is probably more psychological than anything, even if it does get into the trillions. But you just never know what crazy innovation's going on around it that's leveraging it.
Absolutely. Okay, look, thanks very much, gents. And I think we've largely answered most of our questions from there. And in interest of time, we will move on. But just quickly, a recap on Nucleus Wealth. So just make it abundantly clear that we don't have any Bitcoin in the macro business fund or any of our Nucleus Wealth portfolios. What we do have, of course, though, is a range of quality companies, well researched, that we buy at good value at cheap prices as a core ethos of what we do. We use a platform provider called Linear for our separately managed account structure that we put in place for our clients. It's backed by the ANZ Bank for cash management and JP Morgan for the custodian of assets in that structure. JP Morgan being one of the biggest banks in the world. We do also offer a range of 19 different ethical screens that you can apply against your portfolio, which basically gives you the ability to tailor your portfolios with us on a very granular basis. And finally, of course, we've managed to get our fees down to a significantly low level by basically removing a series of middlemen that typically exist in a lot of investment opportunities that you find out in the market. We offer complete transparency through our portfolios, and of course you get the tax effectiveness of having a discrete share portfolio in your name, which the separately managed account offers. So on that note, we'll move into our next one. So just as a bit of a heads up that we have our next week's webinar is a SMSF masterclass called Putting Your Self-Managed Super Fund Under the Microscope. We thought this was timely given that typically people have a little bit of time off over the the Christmas break and the New Year, and may wish to revisit how their self-managed fund's been going, potentially have a look at what investments you've got in there, the performance has been thus far, and of course, an overall look at asset allocation inside of that as well. So that'll be coming out and live to you on next Tuesday at 12:30 p.m. And finally, Matthew, our communications expert, will be sending out a short questionnaire. I think it's got about 4 questions in it. One of the primary ones there, of course, is something to give us a bit of guidance around future webinars. So please feel free to fill that in and let us know how we're going. On that note, thank you to David and Damien for coming along and sharing your thoughts on Bitcoin and all things cryptocurrency and blockchain. And well, thank you very much for your attendance and hope you enjoyed it. We'll see you at the next one. Cheers.